Hi guys, it's Franz from Fractal Trading. Today I want to show you how I use fractals and two other indicators to try and catch the next big move, not really mattering on what time frame you want to catch a trend, if it's the weekly or even the 15-minute or the 4-hour chart. With this trend trading system, you are in to really go and catch a trend, not wanting to trade inside a bracketed market or even pick the high or the low of a move. You want to follow a move and really trade the huge move of or that a trend delivers. Let's have a look at this British pound Canadian weekly chart to really show you how the indicators work. On a weekly chart, which is obviously a higher time frame, you do not get so much noise. The signals are very clear. This is also true if you trade chart patterns or other systems, since the time frame is higher. The data that you get over a longer period of time will simply be rougher, and therefore the signals are clearer, even though you won't get so many of them. Let's have a look at my indicators here on that chart. Starting out with one over here, I'm defining what fractals actually are. You could go and check with Bill Williams, and he would tell you a whole philosophy that stands behind creating these fractals for looking at a chart as an indicator, so to speak. In our case, we simply look at the fractals at up and down fractals, which simply indicate resistance and support levels. The more fractals that you get at one area, the heavier or the stronger the support or the resistance area will be. As it is broken, we are simply entering on this breakout to the up or to the downside. And this has been indicated right here. The up fractal is marked by this up arrow or this triangle. And you would put a pending buy order in here to buy this and follow the trend up. The same is true for these down triangles or down arrows. Those mark down fractals support level, which you would sell as price penetrates it. That would be the first indicator that I use to determine where it is smart to enter and where it's not smart to enter to catch the next big move. If you catch the trend, you would not, or you would exit below this purple line here, which is a simple moving average of 5 offset 3, simply to keep you in the trend long enough and exit at a pretty smart point, or the smallest point that you can get from my analysis. You also have 3 other moving averages in here which really don't have any function for trading, but they kind of show you where the balance zone is. The balance zone is the area where prices need to breathe after they have undergone a trend. This is also known as consolidating or simply correcting. As you see these lines intertwining like they do right here, you know you are in a correction, and you can then find support and resistance levels marked by fractals to trade the next breakout out of this correction. And while it's correcting, you do not want to be in this market, you want to stay out. What I like to do is simply take the outer fractal, not the ones inside, to catch the next trend. As the lines are open, just like here, you know you are in a trending phase. So these 3 lines indicate the area where prices are breathing after a trend, and they show you when a trend is actually happening. As prices have hit a fractal, these lines will start to open up, and prices keep trending until they close below or above, depending on which way you are in the market, this purple line, and then you get out of the trend, wait for the market to consolidate, and trade the next trend. Now, when we look at the bottom of this chart, we do see an oscillator, which is simply an MACD with a little bit of optimized parameters to tell you how the momentum is performing in this market. And what it pretty much shows you is that in this sequence you're looking at an uptrend, and in an uptrend you will see impulse moves displayed on this indicator here with these hills that are created, and in comparison to that, the second hill that is created in an impulse move at the back, and in between you get corrections, major corrections like you see here in this uptrend. This momentum indicator will lose all of its steam to the upside. Of course, prices are losing their steam as well, as you can see in this correction, and then you see the momentum indicator go below zero. In a downtrend, this momentum indicator would actually go above zero. And back here you see the momentum indicator retracing but not going below zero, which indicates a minor correction. Now, the moves that follow a correction will always be greater after a major correction compared to a minor correction. As you get divergences between the impulse hills, just like you see here in this chart, prices are moving higher while the indicator is not. Here at the back, the momentum is not as great as it was in this trend. So as you get these divergences here, you really only have one. You can have 2 or 3 in the S&P and other indices. We even saw more than that at the end of 2015, and you would be looking for the end of this impulsive waves to the upside and looking to sell fractals on the other side of the market, on the other side of the balance zone, as these divergences occur in the indicator, and then follow the market on the other side downwards, not really caring if it's a correction or a new trend direction. You would simply follow the markets by the fractals being created. As you can see here, you also had the end, or you had the end of the upwards tendency, the end of the uptrend. In the indicator, you even have a divergence back here with a minor correction in between. The bigger correction happened here, so you get divergence from all the way over here to here, which makes these fractals valid to sell, and prices have breathed at least a little bit in the balance zone. Usually you will see a bigger correction like here. Here it wasn't so much, but prices went down like that, and you would simply follow it. Now the next target zone, so to speak, even though I don't really care about targets, I simply want to follow the market as long as it stays below this purple line. As it closes above it, I would exit my position here. However, we are approaching an area of quite a few fractals over here, so in between here it could be possible that prices will stop going down and see some correction to the upside, and then we'll simply see how we have to manage, or how we will manage our position. We will let the markets tell us and act accordingly to the indicators. Now this is an example on the really high time frame, how trend following or trend trading works on this really high time frame. This just isn't the only place where you will see this working. You can even go lower. I do like to trade this on a 15-minute or 10-minute chart when I have the time, and this Friday trade here from US dollar yen kind of underlines this. Now for the background to this trade, as I came to the office on Friday afternoon, I saw the previous day's action in the US dollar yen 15-minute chart. A trend down, and then overnight and throughout the morning on Friday it corrected, and if you apply a Fibonacci from this area all the way down here, you will get a 61.8% correction, and then you have reason to sell this down here. As you can see in the momentum indicator, we do have a divergence in here, which actually leads to prices moving upwards, but it's only a minor correction inside of this divergence. What we actually want to see is a major correction inside the divergence, which means that prices still have to go lower at the end of here, which means coming below 107.70, and the indicator down here, the momentum, will stay above the top of the hills that we see here in the front of the chart. So we had all reason to try and catch this move down here, not really knowing what will happen once it reaches this low at 107.70, but we did sell, or I did sell right here where you see the black line, and followed this all throughout Friday, and this position is actually still active over the weekend, so I can see, or we will see, where this opens on Sunday, and follow this market along. You would actually have been short right above this, or right below this fractal. If I had been here before, I would have sold that and took this pin bar probably to get out, since if prices don't get going after I entered, I will keep my stops really tight and not lose any profits. The bigger move then happened later in the day, and it doesn't look like it is over already. It will probably go down all the way to here. Thank you very much for watching.